If you think you know enough about fair value gaps, then take a look at those three types of fair value gaps. Are they the same? If you think so, then make sure to watch the video till the end as I'll explain how they're actually not. Not all fair value gaps are the same, and each one will tell you another story. Let's get into the video full of secrets. Now, a lot of people claim that they know enough about fair value gaps or they know a lot about fair value gaps. However, in the reality, they almost know nothing but that a fair value gap is a three candle pattern, and everyone knows this. So from this candle all the way to this candle, from the first to the third, we have a gap here where the wicks do not overlap, and that's something that is very clear and almost everyone knows about. However, what we're going to be doing today is focusing on the third candle of the fair value gap. A lot of people don't know this, but the third candle actually tell you a big story about what's going to happen. It's going to actually answer a lot of questions. For example, will price retrace back to the fair value gap? Will the fair value gap hold? Or how the reaction of the fair value gap will be? All of those questions are going to be answered by one specific candle, which is going to be the third candle of the fair value gap. Now, starting with this, a very significant pattern of a fair value gap. However, it happens not always, but I want you to stay away from it, okay? Because if you trade this specific type of fair value gap, note that the probability of price filling this fair value gap is going to be much lower. So much lower than your normal fair value gap. So what is the first one? It's when we have, for example, a big candle with a displacement. However, just focusing on the third candle, what do we see here? This was the first candle, second candle going up, and then third candle creating this fair value gap. Now the question is, and think about it with me, why did this fair value gap was not filled? And even when it was happening, I knew that it's not going to be filled, only for one reason. You see the third candle, the wick of the third candle, how does it look? Price rejecting to the upside already, and price closed above. So there was already a rejection happening, and then there was already a lot of buy momentum to the upside, and there is no time for price to come lower all the way to the fair value gap to go up again. Price did not have time to do that. The market did not have time to do that. However, if we go to the lower time frame, we're going to have another picture. So going, for example, to the 1 hour, or let's start with 5 minutes, right? So go into 5 minutes, we're going to see one thing here. This was the fair value gap here. What happened on that week, it was actually price coming to those fair value gaps on the lower time frame. So price came here already, saving liquidity, going up. That's where the rejection happens. So a lot of the time when we have a fair value gap on a specific time frame, where the third candle of the fair value gap already rejected with a high momentum to the upside and then closed above in a bullish way, then we expect this fair value gap not to be filled, most likely. So that's the situation here. Now, if you go to 1 hour, it's going to be more clear. So what happened is we had another fair value gap on the 1 hour that was already filled. So what's the point of filling that 4 hour fair value gap again? The reaction of this or the rejection of this candle was already a mitigation of the fair value gap, and then we started going up. So a lot of the time, just simply know that your probability of fair value gap being filled when there is already a projection, when there is already a momentum to the upside, it's much lower.
Our sponsor, Blue Guardian, is the only firm that gives you a tool to protect yourself from hitting your max daily lows and prevent you from overtrading. And it is very simple to use. They also have a new unlimited time evaluation with low profit targets and no trading days requirement, so you can get funded in the same day. Blue Guardian is a firm that I trust. Use the link in the description below and use the code MOLHAM to get 10% off your next Blue Guardian evaluation.
That doesn't mean it doesn't happen. So if we switch back to the 4 hour, we can see that, okay, this did not get filled, right? However, we have another one, which is, for example, this one. We had a big sell-off here, then a big rejection, leaving a fair value gap here. It was filled. However, what is the difference between this fill of a fair value gap and this one? There is a difference. You see, this one took less time for price to come to the fair value gap. This one, on the other hand, took much time for price to come to the fair value gap. And you're going to notice this. When we have that big rejection of the third candle, it's going to take more time for price to come to that fair value gap. Okay, that's a rule of thumb. And also this example right here. So what happened here? After this price restricting this fair value gap, and you see the speed of price coming to this fair value gap immediately at the next candle, and then another time after 3 candles. However, this one, where we have the big wick, where if we go to the lower time frame, we're going to see only one thing. So if I put this on another color, right, on green, and then go to 50 minutes, what we're going to notice here is that on the red one, where the rejection happened, it was really nothing but a lower time frame fair value gap that gets filled already. So you see, this is not going to get filled immediately, at least, right? Or the probability of this getting filled is lower. We have another fair value gap on the lower time frame, and that's where the rejection already happened, starting going lower. Now, taking a look at this again on the 4-hour, you're going to see that it took, so this is the fair value gap, almost until price filled the fair value gap here, 11 candles. 11 candles of the 4-hour. That's about 3 days or almost 4 days of price action not coming. However, on the other hand, when this fair value gap was created, price only came in after 1 candle and then again after 4 candles. So you see the difference here? So that's a rule of thumb. When we have a big rejection already, it's going to tell us that there was already a rejection on the lower time frame. There was a mitigation of another fair value gap on the lower time frame. And it's going to also tell us that it's going to take longer for this fair value gap to be filled. So expect to wait more, or it's not going to be filled. Now, talking about this fair value gap specifically, you see how it was filled? Taking a look at the left, we're going to see a lot of those examples. So you see, we have one fair value gap here on the 4-hour that was filled almost immediately. Immediately after it was created, filled here, getting respected. And this happened a lot of times. We have also a fair value gap here where it gets respected immediately after. So price comes here, immediately goes up. How do I know which one is going to get filled? How do I know which one is not going to get filled immediately? Now we know that there is a specific type based on the 3 candles that really doesn't get filled immediately. Now take some notes. The smaller the 3rd candle is, the higher probability for the fair value gap to be filled and the faster it is. On the other hand, the bigger the candle on the opposite side is, the lower probability for the fair value gap to hold. That's one thing that you need to understand. What does that mean? Now looking at this, considering this as a fair value gap, right? So this is a fair value gap. All the focus again on the 3rd candle, right? So whatever I said before, this is the explanation. When we have a smaller 3rd candle, then the faster we expect this fair value gap to be filled. So we have this fair value gap here, then we expect this fair value gap to be filled faster. And why? Because now this is a small candle, especially if it has also a smaller wick, then we might just see a manipulation below in order to go to the main drawn liquidity, right? That's what we think is going to happen. Now, let's imagine that this is, on the other hand, has again price going up, and there is already a rejection that already happened here. And this is my fair value gap now. What I think is going to happen? Now, I'm not expecting an immediate rebalance of the fair value gap. Taking a look at this again. So we discussed the high probability one, which is we have a small candle, 3rd candle, right? Small one without rejection, not a big rejection. And then we have a main draw in liquidity here. So we know that, okay, price needs to go there. Now, what is a perfect scenario for price to do? It's to come lower to this fair value gap and start going again to the main drawn liquidity. That's what I think is a high probability one. On the other hand, a low probability one, so let's imagine this is a bullish candle, and then this one, what happened, or let's say this is a bullish candle here, and then the next candle open here, and then started going bearish. And then it has a huge momentum to the lower side, leaving this fair value gap. That's a big mistake you're making if you're still entering from this fair value gap. It could work. Yes, everything could work because the probability still plays off. However, this is a very low probability. Why? Because we see already the momentum of this candle is already huge to the lower side. So we're not trusting this fair value gap no more. It could be just price going lower and disrespecting this fair value gap just like this. Right? Another bearish candle going to the lower side. So when we have the 3rd candle, even though as a pattern, it's still a fair value gap and you could be still trading it. But after this video, you would know that a candle that looks like this with a huge candle to the upside and then another candle to the lower side, almost engulfing it. It did not engulf because if it engulfs, then we have no fair value gap. However, almost engulfing this and leaving just a small fair value gap, this doesn't mean that this fair value gap is going to hold. Actually, it's the lower probability for this fair value gap to hold, right? So this is a very low probability fair value gap. On the other hand, if we have something like this and a smaller body and a smaller wick, then expecting this to be an immediate fill to go up, right? We're going to have a market maker's model, and as big as this one is going to be, we're going to have a bigger market maker's model. Now, Now let's go again to the Forex chart, because what I was discussing is NASDAQ Forex chart. This is New Zealand dollar and US dollar, and I thought that it's going to be a very nice case study to go over the fair value gaps that were created. Okay, so starting with this one, you see, what do we notice here? Weak, not a huge one, but a big one, significant one compared to the others that happened at a fair value gap. What do we notice here? That price did not fill this fair value gap, which is the one above, immediately, and also it was disrespected later. It took a lot of time for this fair value gap to be actually hit, 9 hours. On the other hand, this is only 50-minute time frame. On the other hand, if we take a look at any other fair value gap and what do we focus on? For example, if we go take a look at this was a fair value gap created after a liquidity sweep. But what do we notice here? An immediate retest of this fair value gap, or an immediate rebalance of this fair value gap. What's the reason? Do you notice how big the wick of this candle is? Very small wick, and price already, going bearish into the fair value gap. Not a huge momentum, leaving a small fair value gap like this, where that case doesn't really happen always. So that's gonna only happen using a lower time frame. However, on the higher time frame, you're not gonna notice that happen a lot, because either it's leaving a wick into that fair value gap, or it's not creating a fair value gap at all. But just make sure that if you see something like that case, then ignore entering. Now, what do we see here? An immediate reaction to the fair value gap going to the upside. Now, if we go and take a look at any fair value gap that has a third candle that has a small wick, you're going to only notice one thing, that price actually filled that fair value gap immediately, especially if the third candle did not go bullish. So if the third candle, if it's going like this, 1, and then going up 2, right? And then the third candle determines if we have a fair value gap or no. However, third candle goes like this. So let's say price goes there, and then third candle closes bearish in this case. Now, the probability of this fair value gap to be filled is higher and faster, unlike if we have just a bullish candle to the upside, because the retracement and, this candle itself tells you that, okay, we want to go up faster, right? But if we retrace to the downside, it means, okay, we are planning to retrace, get a fair value here to go up. So really, this third candle tells you a whole story, even if we're going to continue up or we're going to retrace, and how long it's going to take. Now, taking a look at this example, another fair value gap, the third candle on this case in a bullish fair value gap pattern, the third candle is being bearish with a small wick right here, a very small wick, right? What do I expect now? An immediate rebalance of this fair value gap. And that's what happened here. Immediately, price come into that fair value gap. There you go. And then going up. Now, take a look at any fair value gap. You see, there's this one with a small body. Immediately on the next candle, it's tested. Now, however, when I see this, a bullish fair value gap, however, the third candle was bullish, unlike this one where it was bearish. What does that tell us? It's an indication that it's either the fair value gap is not going to be filled immediately, or it's going to take longer, or we might just push up without coming back to that fair value gap, especially if we create another fair value gap above it. On this case, price came to that fair value gap, but not even to the 75% of it, only like slightly coming here, because we had a very clear drawn liquidity on the higher time frame. The price only came here, started going up. And also this one, it did not fill that fair value gap immediately. It took more time for price to come to that fair value gap. However, here, as price was closing bearish on this bullish fair value gap, immediate rebalance of that fair value gap. And this happened over and over, over and over. The same scenario goes on and on. And now here, now discussing this bearish fair value gap, on the other hand, what do we notice? The third candle, what's the color of it? It's bearish, and it's, it was a displacement candle, also closing below. That's a breakaway gap. We expect this fair value gap, not this one, actually, this one, but this one had a huge candle to the lower side, creating also another fair value gap. Now, this fair value gap, we know that it's really hard for this fair value gap to be filled, or it's going to take longer for this fair value gap to be filled. On the other hand, price created another fair value gap. Now, why, even though we had a bullish candle here, but why this fair value gap, it's not going to be filled immediately? Only for one reason. And what's the reason? We had this big retracement already. So price already retraced on the lower time frame and started going lower. So there was a bearish momentum going on when we created this fair value gap. So again, we're not expecting this fair value gap to be filled. Now, this fair value gap, we could fill it, right? Because it did not have that big rejection. There is a rejection, but it was not too big. If we go deep into this on the lower time frame, for example, 1 minute, we're going to notice that price actually came to a fair value gap. So you see, this was the rejection here, and it was price coming to this 1 minute fair value gap and sweeping this liquidity. So you see, it's more clear when you go to the lower time frame, just to see what happened here. So price was retracing into a lower time frame fair value gap instead of going to that 15-minute fair value gap on the higher time frame. So that's the difference. Now you can actually, just using the third candle of the fair value gap, you can expect when a fair value gap is going to be filled, expect when a fair value gap is going to be respected, and so many questions that we answer today. Hopefully you guys like this video. If you do, then make sure to hit the like button, recommend some ideas for the videos, and then share this video with your friends. Make sure to join the Discord. This is Mulham, and I'll see you in the next video.